Welcome to the series Money Tips from Cash. Today we're going to talk about tip number 2, which is setting up a personal budget. Today we already talked about tip number 1, which was living within our means. So let's go ahead and get started. Well, why do we really need a budget? There are many reasons for having a budget. Here are some. A personal budget will include all the sources of income and also expenses and spending. This is the only legitimate way of tracking income and, more importantly, spending. Not having a budget is similar to running a business without accounting. Really, the bottom line objective is to have a better understanding of your financial situation. First, you need to essentially count for the money that you earn and then the money that you spend. A lot of times we spend money on an ongoing basis and have really no idea where the money went. What the budget is going to give you is a better picture of where the dollars are going, and at the end we need to improve our spending habits. So really there are two components when it comes to the budget. The first one is a personal budget, which lists the estimated amount of income and expenses. The second one is what I call a personal income statement. This will include the actual amounts of money that you are spending and the total income that you receive. So let's go ahead and look at the first one, and also how often do I need to work on this. This is a tough one. It really depends on how organized you are. The personal budget should be done at least once a month. The income statement should be handled weekly or even daily if you have time. The idea is if you do it more often, it's going to be more accurate. Once you get into a routine of tracking information, you can start doing this monthly. So now we are on to our first demo, which is to set up a personal budget. We are going to create a personal monthly budget using my example. Also, we are going to use an Excel sheet. You may choose to use another software application, or even you can use paper and pencil to do this. This is actually a budget. So on the first line, what we have is the salary. My salary per year is $95,000. If I translate that to a monthly salary, it comes out to be $7,916, and after taxes, which is 30%, I am left with $5,500.41. $5,141.67. Let's go ahead and look at the expenses. Now, just like my last demo, I've broken my expenses into two categories. The first one is fixed. These are expenses that are usually steady and they don't really change from month to month. And then the other category is non-fixed. This is where we have some leeway and we can make some improvements. So if you look at my fixed expenses, I have a mortgage of $1,365, car payment of $350, a home equity line of $275, car expenses, which includes insurance, gas, etc., for $250, utilities for $260, credit card for $500. Then we move on to my non-fixed expenses. That's groceries for $300, lunches for $100, going out for $400, miscellaneous for $200, investment for $300, and cable for $100. So if we add all of my expenses, this comes out to be $4,400 a month. Then what I've done on the right side is I've done sort of like a summary. Well, my monthly income is $5,541 and my monthly expenses are $4,400. So my net difference is $1,141, which is great. If I can do that every month, I'm going to have close to $1,000 left that I can invest or do something else with. Unfortunately, I don't have that value every month. Things come up and whatnot. So, but this kind of gives you an idea of how to create a personal budget. You basically start out with your salary. You break it down into two sections: income and expenses, and you do this once a month, so that you kind of have an idea of what you're going to be spending money on. The summary of the personal budget: it splits your monthly money flow into two sections, income and expenses. Ideally you want to see positive cash flow, meaning that there's money left on the table after all the liabilities have been taken care of. I know this is easier said than done, but that is the goal that we need to work towards. So the next is actually setting up a personal income statement. This is the demo 2. Here we are just showing a sample printout of a monthly income statement. This was done by hand and it's just a part of the whole thing. You can also use Excel or another software application to do this. Now remember, the personal income statement, we need to do this ideally on a daily basis, and you basically write things that you spend money on, and also the days that you get paid. You can write the paycheck amount. So here, for example, the writing isn't the clearest, but if you look, we've just kind of written down some items that we're gonna spend money on, and here are the amounts. So if I can try to it's kind of hard, but let's just go down the list. So we spent $5 on McDonald's, $8 on Pizza Hut, we did a movie. I even have something down here for $2 for hangers. You don't have to go that granular. If you want to stay basically above $5, I mean, you know, dollar here, dollar there, you don't really need to count it that detail. But we have a phone bill, some other items. So doing this, the whole idea is that if you write this maybe like on a daily or weekly basis, you can better track your income and spending. Let's go ahead and switch back. So the personal budget summary is the only way to track spending. Doing this exercise will make you aware of your spending habits. For example, if you're spending a lot of money going out to lunches, that will show you that that's an area that you can improve on. Or if you're spending a lot of money on clothes and shopping, that will address that also. Over time, you want to control spending and maximize savings. I mean, that is really the bottom line of doing a personal budget. So our next step is going to be getting rid of your credit cards. That's a huge topic. I'm not sure if we can cover it in one video, but we'll try to address the main points. And once again, thanks for watching this video, and I shall be back.